Good morning, I'm Chad Daniker, and I'm here today with Dave Manis and Brent Cole. And we're here to talk to you about the real estate market in downtown San Diego. We frequently get the question from our clients, what's going on with the market? And it's really an involved question, and what we tried to do today is break it down into 6 different categories, 6 different price categories. Each of these categories is different. We're each going to talk about 2 different categories. But the important thing to keep in mind throughout this entire conversation is that a 6-month inventory of homes is a balanced market. Anything over a 6-month inventory of homes would be considered a buyer's market, and then anything less than a 6-month inventory of homes would be considered a seller's market. So Brent's going to start off today with the first category. Brent?
Yeah, I'm going to talk about properties that are under $450,000. So that's broken up into 2 categories, anywhere from $150,000 to $300,000. And in that range, we have a very limited supply. We're seeing about 31 properties sold each month in that category, and it's been increasing every month. And then in the category from 300 to 450, we have about 2.5 months supply. And so those 2 categories combined, they take up about 44% of our market share right now of properties for sale. And so with properties being turned over very quickly, we're seeing first-time home buyers as well as investors dipping down into this category. Those properties, if that's something that you're looking at, you got to be ready to pull the trigger and actually move on a property very quickly.
Wow, 2.5 months supply, and that's where the bulk of the buyers are. So things are just moving
really quickly.
What advice would you give to a buyer that wants to buy in that price range?
What I would say is really have all your ducks in a row and be ready to act quickly. And the properties that are desirable and the buildings that are being looked at are buildings that have low HOAs and are well constructed in prime locations. And so in any of those locations, we're seeing days on the market really drop in that range. And then Dave, you're going to be talking about the next category. So
I am. I'm going to talk about homes from $450,000 to $750,000. A lot of this inventory was created recently over the past 7 or 8 years, and it's in the newer buildings in downtown right now. The $450,000 to $600,000 price category is actually the slowest velocity of the categories that I'm talking about, while the $600,000 to $750,000 price category seems to be moving at a little bit faster pace. In both of these, our absorption is longer than 6 months, so we're still looking at a seller's market, a buyer's market in this category right now. The 6-month point is the point where sellers and buyers change the advantage in the market. So we're just over 6 months, so we still have a buyer's market. The reason for this seems to be that in these new buildings, buyers bought at this price or a higher price, and they're not yet able to sell at a lower price. And also I think that HOAs are affecting the buying decision, the fact that these are buildings with slightly higher HOAs.
When you say slightly higher HOAs, can you give us an idea of what type of monthly dues you're looking at there?
Yeah, absolutely. In this category, we're looking at a lot of buildings that have HOAs in the $750 to $850 price range. And these are some of the new BOSA buildings, some of the very, very nice buildings over on the Embarcadero would be a large part of this segment. We had a slightly faster velocity 6 months ago than we do today, which I think is interesting. This is being squeezed by the investment buyer who's looking at the lower price category and the lower HOAs, I think, Brent, and then the fact that some people are coming to San Diego looking in the higher price categories. Do you see that as a transition into your price category, Chad?
Definitely. Something that I'd like to mention that's interesting is that we do these market absorption rates every year, every quarter of every year actually. And the thing we look for is we do a 12-month average, a 6-month trend, and a 3-month trend. What we try to do is we try to look at the average and see from the average where's the market moving, what's happening over the last 6 months and over the last 3 months. It gives us an indicator into what may happen in the future. In the 750 range to 100 to 1 million range, really the market all last year was flat. If anything, it was actually trending down. Prices were coming down. And this year we're starting to see a little bit of a change. For the months of supply right now in 750,000 to 1 million, we've only got about a 4.3 month supply over the past 12 months. So the average is about 4.3 months, and the 6-month average moves to 3.5, and the 3-month average stays at 3.5. So the market's kind of flat there. It seems like it's improving a little bit, maybe anomaly. It's hard to track at this point or hard to say for sure. but we don't see it going down. We don't see the inventory building, so we don't see the prices going down any further, which is good. It seems like maybe there's a chance we've hit bottom. And of course, a normal market wouldn't take into consideration short sales where the sellers don't have any skin in the game. So it's not necessarily a normal market, but this model works for economics. So we try to take models that have been proven over time and that work and apply them to a market that might be a little bit different. It's going to be really hard to say what's going to happen in the future. Hindsight's always 20/20. So 2, 3, 4 years from now, we'll look back at this market and we'll kind of learn from it and see what's happened. And we've learned quite a bit as the market's come along. In the price range over $1 million, this is a really exciting price category for me right now because we had seen things trend down in this category all last year. When I say trending down, we saw inventory build up and up and up, and we saw prices drop and drop. And now things have changed a little bit. The 12-month supply of homes in this category is 14.27 months supply of homes. So you've got a 14-month supply of homes, which is far from a seller's market. It's definitely a buyer's market. And over the 6 months, the trend's gone down to 11.4. And in the last 3 months, the trend has taken us down to a 10 months of supply of homes. So a 10-month supply of homes, which is really trending in the direction that we've been wanting to see for a long time. It's really exciting. It's hard to say where it's going to go for sure, but we think that this luxury category, as we'll call it, is starting to heat up a little bit. We do know there are homes that have sat on the market in that category for a really long time, but we don't feel that they've been priced right. We've recently seen some homes that have come up priced well in this category, and we thought we had more time to kind of sit there and watch those homes, and they've gone. And they've gone quickly. We're talking less than 30-day sales on homes well over $1 million.
We have been selling homes built by developers in this price category for years and years. The new home market has been really active in this category. Mm-hmm. Now that we don't have any new homes left or any new homes being constructed, what do you think that impact will be?
Well, I think we're going to see a lot more people that we're going and buying from the Bozas and the Mark. Really, Bayside, the Mark, and Sapphire Tower have commanded that luxury category over the past 2 years. Specifically last year, Bayside was just out of control. I mean, they had 108 sales last year. Is that right?
67, I think, or 43 this year alone.
43 this year alone.
For 6 months.
So, wow, I mean, just amazing number of sales, and the market
and in that
really
price
well
category.
Also. So yeah, we're going to see a lot more in the resale market starting to happen. If sellers feel like prices are starting to trend up, I think we'll see more listings, we'll see more people willing to negotiate. But people that paid top dollar in 03, 04, 05, 06, they didn't, for these luxury homes that have value, they're gorgeous, I mean the views, the properties are amazing, they didn't want to give these away. Other people maybe that were experiencing tough financial times that bought in that $300,000 to $600,000 price range, $300,000 to $600,000, they were able to just walk from it and didn't care. But the people, you have to qualify for those short sales, and a lot of the owners that own these luxury homes aren't going to qualify for a short sale when they've got a couple $100,000 or a couple $1 million sitting around and their income is substantial. So it's these interesting dynamics that we see things that look like they're getting better on the high end of the market. We know the bottom end of the market is really hot right now, and the mid-range of the market seems a little flat, so it'll be interesting to watch and see what happens next with that. And we'll update this blog here, this video, in about 3 months. Okay. So every 3 months or so we'll do the market absorption rates. If you want to check it out and see everything that we're talking about today in writing, just Google market absorption rates downtown San Diego condos. You'll find us. We're page 1 right there. You can't miss us. Welcome to sandiego.com. I'm Chad Daniker.
Thanks, Chad. I'm Dave.
Brent Cole.
Thanks, folks.